Hello everyone, my name is Hedi Uustalu and I welcome you to Baltika's quarterly webinar. Today's webinar is hosted by the Chairman of the Management Board, Mr. Meelis Milder, and Chief Financial Officer, Ms. Maigi Pärnik-Pernik, who will introduce the results of second quarter and 6 months of 2017. We encourage you to ask questions throughout the webinar by typing them in the chat panel in the right corner. Your questions will be answered after the presentation. Please do not hesitate to let us know if you are facing any technical problems via the same chat panel. We will now start with the presentation. Meelis and Maigi, please go ahead.
Hello, my name is Meelis Milder. I'm Chairman of the Management Board. And very pleased to welcome on our first webinar. We are really well happy that there is so many participants or investors or people interested of what and how Baltica is doing. So as said, this is the very first time for us, and so don't be too hard. But definitely we try to do our best. And just I'm using the possibility to remind you also other alternative way of asking questions from Baltica. And the Management Board members, which is quite recently opened subsection on our group homepage called Investors Questions and Answers. So that's from my side as an introduction. So I now go with slides. First slide about Baltic Group. Really, it's a long history. We are celebrating this year our 89th year of being in fashion business, and very generally, we are the biggest Baltic states fashion group. Our sales today are going to 30+ countries. Over 60% of our production is exported. We own a retail network of 126 brand stores in 8 countries, including franchise stores. We wholesale to European Union and CIS countries. Our e-store and morefashion.com is able to deliver to 44 countries, and our last year's revenue was 47 million euros. And from the sourcing side, we source from many countries all over Europe. The number of the countries we're sourcing is 19. We're very proud of having nearly 50% of our products also produced here in Tallinn in our own factories. And our design, production and logistics center are also located here in Estonia, in Tallinn. So we have currently 5 brands, Monton, Mosaic, Baltman, Bastion, Ivan Nicolo. And if you are interested in those brands more specifically, then also please visit our brand websites. Now we go to the highlights of the Q2 and 6 months. I would like to introduce a new member of the Management Board, Mrs. Ingrid Kormik, who was selected on May 29th this year to be a member of Baltic Management Board. She is a director or head of our purchasing and supply chain. Ingrid has been working in Baltica almost 14 years and is a very well recognized specialist and professional in her fields all over in Estonia and the Baltic states. So we are very pleased to have her with us on the board.
Yes, hello from my side as well. I am Maigi Pärnik, CFO, and I will continue with the presentation. Our annual general meeting took place on 8th of May 2017, and the AGM decided to approve the annual report of 2016 and allocate the 2016 profit to retain earnings. The second decision was appointment of auditors, PricewaterhouseCoopers as the auditor for auditing the next 3 financial years, 2017 to 2019. And also AGM decided to issue new convertible bonds, K bonds, in the amount of 4.5 million euros. A little bit more about these K bonds. The main purpose is to refinance the bonds issued in 2014. 3 years ago, we issued the J bonds, we called it the J bonds. And this July was the maturity date. And the new K bonds is to refinance the earlier bonds. The K bonds offering comprises 900 bonds with issuance price of 5,000 euros each bond. The subscription price of the convertible bond is 0.32 euros. And these 2 years convertible bonds will carry an annual interest rate of 6% and are issued with public offering. The offer period has already started. It was in mid-July, and the offer period ends on 16th of August at 2 o'clock. The detailed information is available in the prospectus in our Baltika's website and as well on Estonian Financial Supervisory Authority website. Important is maybe as well that our largest shareholder, KJK Fund, is willing to subscribe the new bonds in amount of 3.6 million euros. And now let's continue with the quarter 2 and 6 month results. Meelis.
Yes, I just refer to objectives for this year, 2017, which are publicly available also on our webpage and in our annual reports. And perhaps those are very good to be compared then with our actual results. Briefly, we are targeting in 3 different but interrelated fields. It's success of the company, measured in increase of profitability and improved gross profit and operating expense ratio. And then second, satisfied customer, which is measured by increase of sales in all channels we're working today with, which are retail, wholesale, franchise, and e-com, and obviously motivated employees. But now we go on with the numbers.
I start with the revenues. Group's 2017 second quarter revenue was 11.7 million euros, decreasing by 1% compared to the same period last year. Baltika's largest business segment by sales volumes and profitability, the Baltic's retail market, decreased 4%. Beside the profitable Baltic segment, Baltika places great importance on developing and increasing sales in the other channels, and e-store wholesale franchise sales continued to increase in second Q, respectively 47% and 17%. The biggest business segment, retail sales, forms 82% of total revenue, and in quarter 2 the retail share has decreased by 2.8 percentage point due to the other channel accelerated growth. In the first half year, Baltika's revenue increased 1% compared to the last year. And now a little bit more about the revenues by channels. In the second quarter, Baltika's largest business segment, retail revenue, was 9.9 million euros, decreasing 4%. The retail sales in the Baltic region were mostly impacted by the lowest demand in the recent years for the spring-summer collection in April and May. In June, the retail sales recovered, and due to the season and sales campaign that was earlier than usual, there was a growth in sales in June. Biggest retail market continues to be Estonia, followed quite equally by Latvia and Lithuania. And by brands, Monton brand with 42% and Mosaic brand with 31% had the largest share of Baltika's group retail revenues. Wholesale and franchise revenue increased 17% in second quarter and was 1.4 million euros. In the first half year increase was 9%. The growth in wholesale and franchise was supported by higher sales volumes to Peek and Kloppenburg department store chain and an entrance to new franchise market in Serbia. At the end of the second quarter, there were 32 franchise stores representing Baltika's brands, and Baltika places great importance on developing the wholesale and franchise segment. E-com, e-store and morefashion.com sales revenue increased 47% in the second quarter and was 371,000 euros. Orders were placed from 31 countries, and countries with the largest e-store revenues were continually Estonia, Latvia, Lithuania, Russia and Finland. The best-selling brands in e-store are two of the Baltika's largest brands, Monton and Mosaic, and Ivo Nicola. Similarly to wholesale and franchise revenue, the e-store revenue increased in the first half year as well. Revenue increased 33% compared to the same period last year and was 720,000 euros. This was about the revenues, and now key figures of the group. The second quarter resulted in net profit in amount of 199,000 euros. The result of last year's same period was profit of 346,000. First half year loss was 391,000 euros. Last year comparable number is 147,000 euros. As operating expenses is under control, the reason behind being less profitable on group level is gross profit and GP margin. The quarter gross profit was 6 million euros, decreasing 165,000 euros compared to last year. And the decrease is mainly attributable to deeper markdown in retail during the first half year. The company's gross profit margin in the second quarter was 51.3%, which is 1 point lower than in the same time last year. And the reason again is due to weak sales results in April and May, the inventory level was higher than expected. Thus, the season and sales campaign started already at the beginning of June, which in turn resulted in good sales result in June, but had a deeper markdown than in previous year. As I already mentioned, the group's second quarter operating expense stayed on the same level as last year, although due to a decreased revenue, the expense rate has slightly increased. At the same time, the ratio, OPEX ratio to revenue has decreased 0.2% in the first half year. This is all we wanted to specify about the results, maybe a summary from Meelis. And then all your questions are welcome.
Yes, Mike, I can only repeat what you already have said, that in comparison with our objectives, first of all, sales. Retail was below our expectations. Reasons Mike already commented, but this is unfortunately due to difficult trading conditions in April and May, and we had to react accordingly. Wholesale and franchise and e-com at the same time, we were pleased with the growth numbers in these channels. GP margin was lower than expected due to higher markdowns in retail, as already commented. Pleased with OPEX being under control.
Okay, but then it's all from our side for the moment, and if you have any questions, we are very Please stand welcoming all the questions.
Thank you, Maigi and Meelis. As Maigi said, you are most welcome to type in your questions. You can do that with the chat panel, which is situated on the right hand. We'll give you a couple of minutes to do that. It seems that we have no questions at the moment, but you can always send the questions through Baltika's web channels or via email. Thank you for participation.
Thank you.
Thank you.